Hello students, so in this video we will see paper of Form 2 National Assessment year 2020, subject bookkeeping. Students, for better understanding, solve this paper together with me. I am also providing PDF of this paper in the description from where you can take printout of the paper and solve together with me for better understanding. Let's start. Let's start with section A. Here multiple choice questions are there. See students, this question is very scoring. So the first one, which of the following best describes purchases? Options are item bought, goods bought for resale, goods bought on credit and goods bought in cash. So students, if we want to give answer for the purchases, best describes purchases. So answer will be B, that is goods bought for resale. See, if you remember definition of goods, it tells that they are articles or commodities which are the either bought and sold or produced and sold. So the answer goods bought for resale is the correct answer. Second one, which of the following is not the objective of studying bookkeeping? Which is not? See, you should read multiple choice question very carefully. So here it is given which is not the objective of studying bookkeeping. So if you remember, we studied objective of studying bookkeeping. So the answer should be, out of this 5, objectives of studying bookkeeping should be determination of profit or loss of the business, knowledge of credit dealings, business control, reliable financial position and fair tax assessment. So these are objectives of studying bookkeeping. So here it is given which is not the objective of studying bookkeeping. So here you can see the answer is D, to provide opportunity for employment, because the other 3 are the objectives of bookkeeping, like to control business, to assure fair tax assessment and to determine profit. Next one, what is the alternative name for the sales journal? So here options are given: sales invoice, daily sales, sales ledger and sales day book. So answer is B, sales day book is the alternative name for the sales journal. So student, for purchase journal it will be purchase day book, alternative names. Fourth one, what does a debit balance of 40,000 in the cash account of a business shows? What does a debit balance? See student, this you have studied in ledger. So the debit balance of 40,000 in the cash account, it shows, answer is A, it shows that the business has 40,000 cash in hand. So if you remember cash account, on the debit side we write down the entries where the cash comes in. On the credit side we write down for the cash goes out. So at the end the debit balance is 40,000. Debit side is greater, so balance is coming this side, credit side. This is known as a debit balance. Okay, when you carry it down, it comes on the debit side. So answer will be A, that is the business has 40,000 cash in hand. The other options are cash has been overspent, the total of cash received was less than 40,000, or 40,000 was the total of cash paid out, which are wrong answers. Next, fifth one, given a desired cash float. So this is from petty cash book topic. Cash float of 20,000. If shilling 14,600 is spent in the period, how much will be reimbursed at the end of the period? See, if you remember, we saw that petty cash float, it is the amount at which the petty cash starts each period. It is also known as the impressed amount, and at the end of the period the petty cashier is reimbursed with the amount equal to the amount spent in order to restore the initial level of cash. So reimbursement should be with the amount equal to the amount spent. So how much amount is spent over here? It is 14,600. So option C is correct answer, which shows 14,600. See, if I explain further, you can see over here cash float is 20,000. How much amount is spent? 14,600. So the balance left at the end with the petty cashier is 5,400. So again, to make the same cash flow 20,000, how much amount he should receive, that is reimbursement, should be the amount which he spent, that is 14,600. Turning to the next multiple choice question, a check paid by the business but not yet passed through the banking system is known as. So this is from the topic bank reconciliation statement. So answer is, you can see from the 4 options, answer will be D, that is unpresented check. See, unpresented check means these are the checks which are issued to creditors, to whom business has to pay the amount, to creditors, and they are credited to cash book of the business, but they are not yet presented to the bank for payment until the bank statement is prepared. So they are known as unpresented check. A check paid by the business but not yet passed through the banking system. Why? Because they are not yet presented. So answer is unpresented check. If you see other options, stale check, it is like check which is 6 months older. Then it is given uncredited check. Uncredited check means they are the check which are received and deposited into the bank for collection, but they are not yet collected and credited by the bank until the bank statement is prepared. Then it is given dishonored check. Dishonored check, they are the checks which the bank has refused to pay because of many reasons. So the answer will be unpresented check. Next one, which of the following best describes as a trial balance? Which of the following is best describes as a trial balance? So as you all know, a trial balance is a statement showing a list of debit and credit balance of account. And from where these balances we get? We get these balances from the ledger. So the answer will be, which of the following best describes a trial balance? See student, you can pause the video, you can read the options and think over that which will be the correct answer before I give the answer. So the answer will be C. It is a list of ledger account balances. Which of the following best describes as a trial balance? A list of ledger account balances. See, some options are like confusing one, like the last one, it is given it is a list of all ledger account. So here students are mostly making mistake. They will be wrong writing answer in a hurry, like they will see ledger account, okay, and they will write D. No, it is not list of the names of ledger account only, but there should be it is list of ledger account balances where we write the balance amount. Then the next one, a petty cash book is used for recording. It is very easy. So the answer is B, small cash payments. Next one, which of the following is an asset to a business? Very easy. Debtors, creditors, bank overdraft and loan to the business. So the answer is A. When we speak about asset, where we receive money or they are the properties, the amount is receivable or they are the properties of the business. So answer will be debtors, the customers to whom business is selling goods on the credit and the amount is receivable from them. Creditors are liability to whom amount is payable. Bank overdraft is again liability. Now we will see the next one. So turning to the next question, which of the following are sources of government revenue? Sources of government revenue. So if you see the answer, you will find the answer C is correct. C is taxation, interest from investment and grant ads. See, this is from the topic government accounting and budgeting, where you can see there are various government revenues are given. Sources of government revenue like taxes, direct indirect tax, fees, fines and penalties, investment, interest, sale of public non-current asset, dividend, and so on. So here you can see in the option C answer, there government revenues given like taxation, interest from investment, grants and ads. So these all are government revenues. If you see other options, there are like in the A, taxes, license fees, this is correct, but government employees salaries, it comes under expenditure. In the option D, there is consolidated fund is given. B, taxation, grant, public road maintenance, this is again development expenditure of the government. So option C is fully correct, where there are all these are sources of government revenues: taxation, interest from investment and grant and aid. Now we will turn to second question, which is match the pair. For each of the item in 1 to 10 from column A, we have to choose correct response, correct answer from column B, and then we have to write the correct answer down in this table of the column. Let's turn to the first one, a monthly or quarterly summary which the bank sends to its customers. So students, I suggest you whenever you solve the question, multiple choice question, just go through all these items which are in the column A and column B, read first all the items and then start solving. So the first one, a monthly or quarterly summary which the bank sends to its customer. So if you see the answer, you will find answer F is correct. That is, the answer is bank statement. So bank statement is a statement which is prepared by the banker and it is sent to customer, showing the dealing between bank and the customer. This statement enables the bank customers to check their funds in the bank regularly and update their own records of transactions that have occurred. So here, which is the statement bank sends? It is the bank statement. The next one, see students, I am writing the answers over here and then we will shift all the answers in the table below. Next one, a statement prepared to reconcile cash book balance and bank statement balance. So see this, they both are from the same topic, bank reconciliation statement. A statement prepared to reconcile. So which statement we prepare? So we prepare bank statement. So here the answer of first was F. Answer of second is bank reconciliation statement, that is B. See, bank reconciliation statement is prepared to reconcile which are the causes of difference between cash book balance and bank statement balance on a specific date. Next one, third, the amount deducted by the bank for the services offered to its customers. See, bank charges its customers for the services it provides to him. See student, nothing we get free of cost, right? Except parents' love. So the amount deducted by the bank for the services offered to its customer, what bank charges? Bank charges. The answer is D. So bank deduct bank charges amount for the service which it is offering. Fourth one, an instruction given by account holder authorizing his bank to make a regular payment on his behalf. See, in the bank, when the account holder opens his account, it might give some standing order to him for the fixed and regular payment supposed to be made by bank on behalf of its customers, like for example payment of insurance premium, payment of house rent or payment of factory rent. So bank will follow these instructions of the account holder and make all these payments on the specific date without fail. So these instructions which an account holder is giving, these instructions are known as L, standing order. So answer is L, standing order. Next one, fifth one, the amount of money which the bank customer can draw out of the bank in excess of his bank balance. See, this facility is available to the current account holder. They can withdraw more money from its account than the balance it is having, so it is in excess of his bank balance. This is known as bank overdraft. So the amount of money which the bank customer, that account holder, is withdrawing in excess of his bank balance is known as bank overdraft. Next one, deposits directly lodged into customer's bank account without his or her knowledge, so it is known as direct remittance. Sometimes account holder might not be knowing, but there are directly some deposits from its customers or from any debtors, so they are known as direct remittance. Next one, a check deposit in the trader's bank account is returned by the bank unpaid for various reasons. See, sometimes the check is returned from various reasons. This is known as dishonored check. See, the reasons may be any, like there might be insufficient fund in the account, or amount in figure and word differ, or mismatched signature, or maybe it not be signed properly, date is not written properly, or it is post dated check. So due to various reasons, sometimes bank return that check, bank refuse to pay that check, so it is known as dishonored check. Next one, 8.1, accounting mistake in recording and posting some transactions and entries in the books of account. Sometimes there might be some mistakes in recording and posting the entries. These mistakes are known as errors. Option number I. 9th one, an evidence for petty cash payment. For everything proof is needed. So for petty cash payment, what is the evidence? So it is petty cash voucher. Option number K. Then the last one, the actions by which petty cashier is refunded the amount spent in the given period. This we just discussed above. Petty cashier is refunded the amount spent in the given period is known as, that action is known as reimbursement. So students, this answers now we will write in the table below here. So here all answers we have written. Now we will turn to the next question. So the next question, mention 5 types of errors which affect the trial balance agreement. So students, this is from the chapter correction of errors. See, bookkeeping errors, as you all know, are the mistakes committed by the bookkeepers when recording transactions in the books of account. Okay. Now there are 2 types of errors: errors not affecting the trial balance agreement and errors affecting the trial balance agreement. So here you should read the question carefully. What it is asked, types of errors which affect the trial balance agreement, So which are these errors? Number 1, error of partial omission. So here I am writing all the errors which affect the trial balance agreement. So here they are on the screen. 5 types of errors which affect trial balance agreement. Means these are the errors which can be revealed by the trial balance disagreement. Means in the trial balance, the sides, this trial balance, both the side will not be tally. There will be disagreement. The total will not be same. So there are these are the 5 types of errors which affect the trial balance agreement. Number 1, error of partial omission. Second, error of casting. It can be overcasting or undercasting. Error of partial omission means this error arises when only one aspect of transaction, either debit or credit, is recorded. So there will be disagreement in trial balance. So number 1, error of partial omission, error of casting. It can be overcasting of or undercasting one side of account. Error of carrying forward, error of posting to correct account but wrong side, and this is error of posting to correct account with wrong amount. Okay, so let's repeat again. 5 types of errors which affect the trial balance agreement, So error of partial omission, error of casting, error of carrying forward, error of posting to correct an account. See, in the both this point, correct account, but here but wrong side, this is with the wrong amount. So the 4 points start with P, 3 points, and the 2 points with CC. Right, now this is the errors which affect the trial balance agreement. Now students, also here we can revise the errors which are not affecting trial balance agreement. So this question can come like errors which affect trial balance agreement or errors not affect trial balance agreement. There are also errors which are not affecting trial balance agreement, means which are not disclosed by trial balance. So they are error of omission, error of commission, error of principal, error of original entry, complete reversal of entries, and compensating errors. See students, I am not explaining here in detail these types of errors. For this I am making another video, because in this video we are discussing all the questions from the exam paper. So repeat again, these are the errors not affecting trial balance agreement. So not affecting trial balance agreement are error of omission, commission, principal, error of original entry, complete reversal of entries, and compensating errors. And these are the errors which affect the trial balance agreement. So check out the difference and revise this both types of errors. Now the next question, turning to the next question, question number 4. For each of the items 1 to 5, compute the missing amounts and write them in the space provided. Okay, so the assets, liabilities, and capital. So for the each, like 1, 2, 3, 4, 5, asset is given, capital is given, liability is given, and any one item is missing. So you have to calculate the same. So first one, here asset is given 15,700, liability is dash, and capital is given 8,650. So to make calculation easy, we will do this on this paper, and the answer we will write down here. See students, you can do this in the space provided in the paper, and then write down the answer over here, right? So for that, first thing you should know the formula. Capital plus liabilities is equal to asset. Capital plus liability is equal to asset. So first one here, what is the first one? Asset is given 15,700 and you have to find out liability. So the first one, liability is equal to asset minus capital. Liability equal to asset minus capital. See students, this type of question is very scoring and very easy. So practice this and don't make mistake in this question. It is very easy. So liability equal to asset minus capital. How much is asset? 15,700 minus capital is 8,650. So what is the answer? Answer is 7050. So this answer you have to write here in the space provided, right? Now the second one, here you can see liability is given 8850. I have written this, and capital is given 24,500, and you have to count asset. So asset is equal to liability plus capital. So what is the liability? 8850 plus capital is 24,700. So when we add this both, what we will get? Asset 33,550. So this we are writing in the space provided, 33,550. Now the third one, now in the third item, the item missing is capital. So capital is equal to assets minus liability. So asset is 27,310 minus liability is 6,350. So answer you got 2960. So students, you can pause the video, make on your own calculations and then cross check answer. Now the fourth one, assets is not given. So assets equal to liabilities plus capital. Liabilities 13,430 plus this capital 38,150. So when we add this both, we get answer 51,580. So this you have to write here 51,580. And the last one, liability is not given over here in the fifth item. So liability is equal to assets minus capital. Asset is 20,500, capital is 17,620. So when we deduct this amount, so we get liability 2,880. So don't forget to write the answer in the space provided. So in this way, this first, second, third, fourth, fifth, we solved this first 5. We got the missing items and we have written. So students, always make sure show your working notes. Like here in the space provided, you can calculate this answer, show calculations, write down the formula. Now the next one here, down to this, after assets, liabilities and capital, what is given? Cost of sales, gross profit and sales. So 6, 7, 8, 9, 10, again the 5 entries are given and we have to calculate the missing items. So let's start. So the formula to remember, sales equal to cost of sales plus gross profit. Okay, sales equal to cost of sales plus gross profit. In the first item, sales amount we have to find out. So cost of sales is given 26,000, gross profit is given 14,000. So when we add this both, we get sales 40,000. So when we add this both item, we get sales amount 40,000. Okay. So now the next one, in the second question here, 7th, cost of sale is missing. Cost of sales equal to sales minus gross profit. See students, this you are doing in income statement. Cost of sales equal to sales minus gross profit. So sales is 92,000 minus gross profit 48,000. So you get cost of sales 44,000. So write down this amount here, 44,000. Next one, now here gross profit is missing. So gross profit equal to sales minus cost of sales. So here sales is 130,000. Okay, cost of sales is 115,000. So when we deduct this amount from this, we get gross profit 15,000. So writing this amount, the space provided 15,000. Ninth one, now here sales is not given. Again, sales equal to what? Cost of sales plus gross profit. So how much is cost of sales? 156,000. What is the gross profit? 24,000. So when we add this both item, we get sales 180,000. See students, this looks easy, but many times students are making mistakes over here in the simple calculation. Again, where sometimes they are making mistake. Now instead of cost of sales, suppose you are writing the other amount. Now here it is given 156,000, but instead of writing this amount, if you are writing 115,000, the item given in the previous one, so your answer will be wrong. So make sure, recheck again that whether you are writing the correct amount, recheck this calculation that okay 180,000 is correct, cross check and then write down. Don't make mistake in this simple question where you can earn more marks, you can score more. And the last one here you have to find out cost of sales. So cost of sales equal to sales minus sales minus gross profit. So how much is sales? Sales is 95,000. What is the gross profit? 45,000. So when we minus gross profit from sales, that is 45,000, from 95,000 we will get cost of sales 50,000. So write this here, 50,000. So in this way, students, see, we have written this calculation for cost of sales, gross profit and sales. Now turning to next question. Question number 4. On 1st January 2019, Rita started a business as a furniture dealer with the following assets and liabilities. So these details are given: cash in hand, cash at bank, furniture, building, debtors. So this information is given regarding assets and liabilities. Okay, so this is given and what they are expecting from us to prepare. So here down you can see, record the given balances in the general journal and post them to their respective ledger accounts. So students, this you have already studied in form 1. So here you have to prepare general journal and post them to their respective ledger account. Now you can see the space is this much only here. So we will adjust in the space. So let's start. So record the given balances in the general journal. Okay, see, general journal, you all know that it is a book of original entry, in which those transactions which by their nature can't be recorded in any other books of prime entry are recorded. So what is the uses of this general journal? Which entries we record in the general journal, or we call it as a journal proper. So it records the purchase and sale of non-current asset. It records opening entries, closing entries, entry to correct errors, entry for writing of bad debts. So now here the entry, what is given here? On 1st January, Rita is started a business, and the following assets and liabilities are given, and record the given balances in the general journal as on 1st January 2019. So here we are recording, that means we are recording opening entries. Okay, opening entries. So these are the entries needed to open a new set of books. So this assets and liabilities we will record here in the general journal. As you all know, on the debit what we write down? Assets, and on the credit we write liabilities. Then the balance what we will get is capital. So let's see which are the assets over here. So cash in hand, cash at bank, furniture, building, debtors. Debtors is a asset, P Fundi and M Sonje. And then Rita owes to Charles and John. So this is creditors. So let's write down one by one all the assets. So number 1 is cash in hand. So here we have written all this assets, starting from cash in hand, 20,000 cash at bank, 80,000 furniture, you can see here 50,000. So we have written furniture 50,000. So all these assets we have written on debit side. Now the liabilities, that is Rita owes, the proprietor owes this amount to Charles and John. So they are creditors for the business. So their balance will be credit balance. So let's write down after this creditors. So creditors Charles and John. See which side we have written? Credit side, 30,000, 10,000. So debit side total, if you count these items, it will be 240,000. Okay, and the credit total is 30 plus 10 is 40. So when we deduct this 40,000, that is this liabilities from this assets, 240,000, balance is 200,000. So this balance is capital. Okay, so in this way our general journal as on 1st January 2019 is ready. Details, or you can write particulars, debit and credit. This is Tanzanian shilling, So we have written all assets. How to write general journal, or what is the other name? Journal proper. Writes all the amount on debit for the assets, then credit for liabilities. So take the difference, deduct this liabilities from this asset amount. So the difference what you get is capital. So here it is 200,000. Now what it is asked in the question, post them to their respective ledger account. So this opening entries we are passing in all the ledger accounts. So starting with cash in hand and cash at bank. So for this I have prepared here 2-column cash book. See, to save the time and to avoid video to be very long, I just draw already. You can see the format. 2-column cash book. This is cash bank both the side. Here you can write down details or particulars. So cash in hand is 20,000 and cash at bank is 80,000. So this is all entries we are passing for opening balance. So here balance brought down, for the cash it is 20,000 and for the bank it is 80,000. So we are showing this effect in the ledger account. Now another is furniture. See, all assets will have debit balance. So balance brought down 50,000. Then for building it is balance brought down. How much the building balance? You can see here 20,000. So you should remember that all assets debit balance. Okay, balance brought down. For the P Fundi debtor 50,000. See, you know already the ledger account format properly. Date, particulars, folio amount both the side. In the date column even you can write the date 1st January 2019. As here there is less space, and to show all this on the one page, here I have not prepared the full format, so you can draw properly. So for M Sonje, how much? 20,000. So balance brought down again on the debit side. Now for other two creditors, Charles and John, it is 30,000 and 20,000. So credit side balance brought down as they are creditors. Liabilities, their balance is credit balance. Okay, for the opening entry we have passed, we post to all the ledger accounts, and the last account is capital account whose balance is 200,000. So again on the credit side of the capital account, balance brought down 200,000. So in this way we prepared general journal and post to all this ledger account. Now turning to next question. Question number 6. So what is given in question number 6? Rukia had the following items in her balance sheet on 30th April 2019. So these are the items given, like capital, creditor, fixtures, etc. during the first week of May 2019. So these are some adjustments given. She brought extra stock, then these adjustments are given. Using the information provided, draw up Rukia's statement of financial position as at 7th May. So see students, this items balance is given on 30th April 2019, okay, and during the first week of May these adjustments are given, and after the first week as at 7th May, what will be the statement of financial position we have to draw over here. So let's prepare. So Rukia's statement of financial position as at 7th May 2019. Okay. Now before starting, we should see what is the adjustments given over here. So here it is given during the first week of May 2019. She brought extra stock. for Tanzanian shillings 1100 on credit. So when she brought extra stock, so now here the effect what we have to give is when she brought extra stock, so we have to add in stock, so plus in stock, and as it is on creditors, so our creditors will also increase as it is purchased on credit, so creditors will also increase by that amount. Second, one of Rukia's debtors paid her debt. Okay, when the debtors are paying their debts, that means we have to deduct from debtors the amount which they have paid, and it is by check, so there will be addition in the bank amount. Third one, she bought a computer by check. So when she buy a computer, so that means there will be increase in the non-current asset, as computer is non-current asset, that is fixed asset, and as it is by check, so we have to reduce from the bank. See students, balances are given as on 30th April. Okay, so 30th April, these are the amount for the different items like cash at bank, fixture, stock. And now in the first week of May, again there are some of these transactions taken place. So we have to give the effect of these transactions as we are preparing the SFP as at 7th May. So we have to consider this adjustment when we are preparing SFP. Now students, one correction you have to make in question paper, this capital amount 31,700, it is not 31,700, there is a mistake, it is 37,190. When we make total of these balances for assets and liabilities, capital, then we come to know that there is some difference of 5490. So when we are adding here, so there is an error in this question paper, so capital amount should be 37,190. Now let's start, and I'm again repeating that the PDF of this question paper I have given in the description, so you can take printout of the PDF and you can also solve this question paper, and while solving make the correction which I have told. Let's start. Now statement of financial position, you know the statement of financial position, other name is balance sheet. We are preparing statement of financial position of a business on a given date. It shows assets, liabilities and capital. Assets, liabilities and capital of the business at a certain date. It helps to ascertain the true financial position of the business at a particular date, and it helps to show what a business owns and what it owes. So beginning with, in SFP what we do, we write first all non-current asset. All non-current asset. Non-current asset, what is the other name? Other name is fixed assets. Non-current assets examples are like land and building, plant and machinery, furniture, fixture, car, motor van. These all are non-current asset. So simply we have to see in the balances given. So here you can see the first one is fixture. So you can write down here fixtures amount is 9,600. Then it is given car 12,300. Then the stock is current asset, debtors current asset. So these are current asset given. Now if you remember, we have seen that in the adjustment number C, it is given she bought a computer. So we have to add in our non-current asset, computer is non-current asset. So don't forget to give effect of this adjustment. So computer is worth 6,100. So these are the three non-current assets we are having. So when we add this three together, we get 28,000. Okay, after non-current asset, we are writing all current assets. So let's write down now current assets. So current assets, we are giving heading. Now which are the current assets? So in the current asset, see current assets, which items come? Stock, debtors, cash at bank, cash in hand, bank bills receivable. So here you can see stock amount is given 8,600. Now we saw in the adjustment number 1, she bought extra stock. So we have to add this 1100. Okay. So we will show this effect like this, 8600 plus 1100. So now the value of the stock should be 9700. After stock, let's see the next one. Debtors given 8150. See, you can see in the question, debtors is given 8150. So write down debtors. I am writing in bracket because there is again adjustments. See, it is given one of the Rukia's debtors paid her debt 4500. So as one of the debtor paid some amount, so we have to deduct this 4500 from this. So now the value of debtors as on 7th May is 3650. After debtors, cash at bank given 3040. See, here you can see. See students, when I am solving, give attention to the screen, what I am trying to show you, from where we are taking the item. So cash at bank is given 3040. Again I am writing in the bracket because there were this two effects. See, for the adjustment number B, as I told, we have to add as one of the debtors paid by check, and adjustment number C, computer paid by check. So we have to deduct this amount for the computer. So in the 3040, add 4500 and minus 6100. So when we give this effect, then amount of the bank is 1440. Then the last item remaining for the current asset, see, we have taken the stock, debtors, cash at bank. Now the last one is cash in hand. Now there was no transactions which is affecting to cash in hand. So we can directly write down cash in hand 2900. So when we add all this current asset, we get 17,690. Then we have to add this non-current asset 28,000 and current asset 17,690. So we get 45,690. See, this is different color I am using so that it will be easily distinguished by you. Okay, see, these are the first what we have written, all non-current asset, then all current asset. Okay, then add the both non-current asset, current asset. So we get this total assets. Okay, now we will write down capital and liabilities. So now we will write down financed by. So finance by capital was given 37,190, which we have written. After that we have to write down current liability. So what is the current liability above? So current liability is only one, creditors. Okay, creditors is given. You can see here creditors 7400, but again there was an adjustment. Number one, she bought extra stock on credit, so this 1100 we have to add in 7400. So showing this effect, creditors 7400 plus 1100, so we get 8500. Okay, so capital and this current liability, when we add, we get amount 45,690. Okay, so you can see this both amount are the same. So this, in this way we prepare statement of financial position, non-current asset, current asset, then finance by capital and current liability. What is new in this question is this 3 extra adjustment. Now after this, the last question is question number 7. So in this question is of BRS, bank reconciliation statement. So let's prepare. So before preparing bank reconciliation statement, let's first read question carefully and see the items which are to be added and which are to be deducted. Now here we have to prepare bank reconciliation statement as at 31st March 2018. Okay, and the balance is given. See here, at close of business on 31st March 2018, Makwawa's bank balance, so bank balance according to his cash book was Tanzanian shilling 78. So student, this amount is wrong over here. It should be 78,000. All right. So make correction in your question paper. So 78,000. This does not agree with the balance at the bank as shown by the bank statement. So as you all know, why we prepare bank reconciliation statement? To reconcile the causes of difference between cash book balance and bank statement balance on a specific date. And there are various causes of difference or disagreement between cash book and bank statement, like unpresented check, uncredited check, direct deposit by customers, standing order payments, bank charges, or even errors and omissions, so on. So here we will see one by one. See students, when there is a question for bank reconciliation statement, first read what is asked. Sometimes they ask to prepare adjusted cash book and bank reconciliation statement. So there you have to prepare first adjusted cash book and then bank reconciliation statement. Now this is word problem given, where you have directly to prepare bank reconciliation statement. Okay. So first we will see one by one all the items, and we will note down here that whether to add this item or to deduct, whether to plus this item or to minus. So here bank balance according to his cash book is given. So we will start bank reconciliation statement beginning with balance as per cash book. See student, your effect will change whether you are taking balance as per cash book or whether you are taking balance as per bank statement. So which balance you are taking first, on this your effect for add or less will differ. So now here in this question we are starting with cash book balance, right? So now see the first item, Mazzalendo, one of the Makwawa's debtor, had paid the sum of 7,300 directly into Makwawa's bank account. So one of the customer directly deposited into bank. See, whenever we prepare bank reconciliation statement, remember the rule that we have to do what other party has done. So now here we have to find out the balance as per bank statement. So in the bank, what one of the debtor had paid, he deposited directly. So if we add this amount in our cash book balance, so we will get the bank statement balance, because one of the debtor directly deposited into bank instead of paying cash. So in such case, the bank sent notification to customer of this transaction, but usually there is some delay in receiving this information from the bank, and therefore the cash book balance and the bank statement balance will disagree, and the cash book balance what we are having here will show less balance, okay, and the bank statement will show more balance. Why? Because debtor had directly deposited into bank, so bank balance is more. So now we have to find out the bank balance. So what we have to do, this 7300 we have to add in the cash book balance. Now the second one, bank interest credited to Makwawa's account by the bank. Again here the bank directly collected interest. So as interest is credited into bank, but no information received till now for the cash book, so there is no entry for this. In this case, cash book will show, of course, less balance, and the bank statement will show more balance. So here what we have to do, again we have to add here this 25,000 in the cash book balance. See here, apply the rule what other party has done. So in the bank statement, debtor directly deposited some amount, so we are again adding here. In the bank, interest is credited. See, as you all know, cash book and bank statement is a mirror image. So whatever is there in the bank statement credit side is to be debited in the cash book. So when interest is credited in the account, that means there is an addition in the bank balance by 25,000. So this amount we have to add. Second, B, a banker's standing order for a trader subscription 25,000 was paid by the bank. See, standing order, they are the fixed and regular payment made by the bank on behalf of its customer, on behalf of its account, like insurance premium they are paying, factory rent they are paying. So here some trade subscription is paid by the bank for the month of March, but the transaction has not yet passed to the cash book. So this transaction is not there in the our cash book. So same thing, what other party, what bank has done, bank has already deducted this 25,000. So now this 25,000 we have to deduct from this cash book balance, okay, so that at the end we will find out the bank statement balance. Third one, the following checks were drawn by Makwawas during the month but had not been presented for payment. Not presented, that is unpresented checks. See, these are the checks issued to this various creditors like Rashid, Hasim, Lisa, Lucy. So they are issued, checks are issued to the creditors, okay, and they are credited to the cash book, means in the cash book the entry is already passed in the credit side of the account, but they are not yet presented. It is given not yet presented. This creditors has not presented the check till now in the bank for payment until this bank statement is prepared. So entry in cash book is already done when the Makwawa already paid this check to this various creditors. So he already passed the entry in the cash book on the behalf of the business. Now this entry is not there in the bank statement. So bank balance as per cash book is less and the bank statement balance is more, because these checks are not yet presented by these creditors for payment. So cash book balance is less. Now in the bank these entries are not passed. So now what we have to do? Again we have to add this amount in the cash book. Okay, again we have to add this amount as unpresented check in the cash book. Then the last one, the sum of 112,000 was paid into the bank account by Makwawa on 31st March, but this item did not appear in the bank statement until a later date. So this is uncredited check. Makwawa deposited check into the bank for collection, but it is not yet collected. So it is not appeared. It is not yet collected. When Makwawa received check, he deposited check into the bank. And so when he deposited, when he paid the check into the bank, what he did? He put the amount on the debit side of the cash book. That is, he thought that cash book balance increase. See what he thought? That he deposited this amount of 112,000. So cash book balance increased by 112,000. But in the bank, there is still no entry for this. So bank balance is less, okay, by 112,000. Now how we will get the bank statement balance? When this 112,000 we will reduce from cash book, okay. So again this uncredited check we have to deduct from cash book, okay. So now first we did this, that what we have to plus, what we have to minus, then now we will make bank reconciliation statement. So this is the way bank reconciliation statement as at 31st March 2018. See, you can see in the question it is given bank reconciliation statement as at 31st March 2018. So how much is the balance? Balance is 78,000. So let's start. First thing we have to write down here balance as per cash book. So let's write down first balance as per cash book 78,000. So this amount we are writing in outer column. Now we have to give effect for which items we are adding and which items we are deducting. So first we will write down the amounts which are to be added. So as we already saw that which items we have to add. Number 1, debtors, one of the debtor directly deposited. Second, interest credited directly in the bank. And the third one about the customers who have directly, and the third one about unpresented check. So these 3 items we have to add. So let's give the entry for these 3 items. Number 1, so let's add this item. So direct deposit by customer, see here 7,300. Then next, bank interest credited by bank 25,000, and these are the checks which are unpresented, okay. So unpresented check, these are the checks which are already given by Makwawa and credited in his cash book, but they are not presented by the creditors. So now again we are giving the reverse effect. We are adding this item unpresented check. So when we add this all amount, outer column we get 122,000. So now this 78,000 plus this 122,000, so we get 200,000. Now from this we have to deduct the other items. So here we will write down less. So which items we have to deduct? Let's see again. The second one, standing order of 25,000. Then this uncredited check 112,000. So the standing order is of 25,000, you can see. So write down standing order 25,000 and uncredited check is 112,000. This both item we have to deduct. So add this both item. So it is 25,000 plus 112,000, it is 137,000. So now we have to deduct this 137,000 from 200,000. So we will get amount 63,000. See, we started with the balance as per cash book, okay, and then at the end what we will get, balance as per bank statement. So students, here we prepared bank reconciliation statement as at 31st March 2018. We started with balance as per cash book. We added these 3 items and we deducted these 2 items, so at the end we got balance as per bank statement. In this way, students, we prepared bank reconciliation statement. So here we solve full paper year 2020 National Examination Council of Tanzania Form 2 paper year 2020. So students, PDF is given in the description. Take the printout, see the video, and then at the end solve paper without looking into video. If you have any doubt, you can comment me in the video. Thank you students, and also subscribe the channel where I am putting other papers also. Use this all paper and wish you all the best.